Hi, welcome to the webinar. Thanks for joining. We're going to take a look at the live charts and take a look at candlestick patterns at critical support or resistance. That is today's topic. We'll also take a look at what's happening with the euro dollar, pound dollar first of all, and dollar yen. Then take a look at the candlestick patterns. First of all, though, be aware that this video, this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Furthermore, please be aware that trading for exchange on global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. As always, when looking at trading, be aware of the economic calendar that has basically a list of events, news data that is coming along. Also be aware that there could be unscheduled announcements and stuff, so you want to be aware of that. You can take a look at the scheduled events by going to Admiral Markets, clicking on Analytics, and then going to the calendar. All right. So let's take a look. Yesterday we had the euro dollar breaking to the upside. In fact, at the end of our session yesterday, I was already anticipating the break a bit because price did not stop at the fib level I had in mind. Yesterday I was looking at a potential bounce at 110, which is a psychological round level, and it was the second approach for the euro dollar going to the upside. The second approach, in my opinion, is like a 50-50, and my plan was to trade the bearish bounce that day, yesterday, or wait for a daily candle to break yesterday. So yesterday's candle, how did it look like? Let's take a look. Yesterday's candle, strong. Close at a high, break above R1, break above the green line, and definitely a large candle. In fact, so large that it already went up to the R2. So what next? I'm going to talk about that, what I'm looking for just in a second. But we just wanted to add a few more comments. One is that not only did it break the R1, it broke through the Keltner, it broke through the channel, and it broke through 110. So there are a lot of things, a lot of resistance levels there. Part of the reason why I personally did not want to trade it at 110, although the break here was fine at 109.30. Yesterday, if you did trade it intraday later, after our webinar, somewhere here, when it broke above 110 and 110.25, great job. I didn't do it. I waited for the daily candle, but it did have, if you did that, you did have still an extension there. So most likely that went well. So hefty resistance zone yesterday, second approach, 50-50. We got the break, a strong break. So that looks like, I think, more upside to come. And I think that price could get up to the R3, could get up to 112.50 perhaps, which is the next quarter level. So I think that there is a good chance for that. With the break of this channel, we might see a further extension. 112.50 could still be a resistance. Price could still be basically testing this top. So basically that could still be a resistance spot. It could still be a turning spot, but that's something of a later concern. Good morning, Bernard, by the way. Good to see you. So I think that looking at this, it's a strong wave 3. It is strong momentum, and I think that the next step should be a shallow and corrective wave 4. All right, so basically, from my point of view, I'm expecting some kind of correction here at the R2. If it doesn't happen, I might miss some extension. I may miss, who knows how many pips it still might go up. But that's what I'm willing to accept. So I'll be looking for basically price to correct down to, I would like to see a 23.6 fib or a 38.2. I'm not sure if it'll get that deep. I mean, not that the 38.2 fib is deep necessarily, but considering the strength of the break here, I'm not sure if it will get there, but any of these two would be fine. So I would like to see that correction for price to get down to 110.50 or 110, 110.20 to be precise. Stop loss, I would be thinking about yesterday's low, which is 109.70. All right. So 109.69, 109.67. And aiming, well, we can take a look at what the target says here. 111.80 is the R3 as well. Maybe an extension up to 112.50. So let's see if we get that. Perhaps price will continue faster than I expect. We can take a look at the hourly chart. We see a bearish candle. We see a bullish candle. So we have a fractal here. We have a high. That's the first step of a potential correction. The next step would be a bearish candle, 5 to 6 candles like this, not breaking this high. And I think we're going to see the first framework of a bearish, bullish bull flag. Sorry, a bullish bull flag. All right, so till now, we have not had 5 to 6 candles not break the high. In fact, ever since this beginning spot, price has actually continued in one shot to the upside. Wait, but maybe here actually. Let me check this part. 1, 2, 3, 4. No, okay, sorry. There was 5, 6 candles break right here. Okay, so more actually. There was a significant pause there. Here we had a slight break. So this was a swing. And sorry, let me do that again. This was a swing. And then this was a swing. But yeah, you get the point. It didn't happen too often. All right. So wave 4, I would even think 110.50 is most likely candidate, and then boom, continuation like that. That's what I'm expecting, and that's the next step in my view for the euro dollar. If you have any questions, feel free to let me know through the chat, but I'll move on in the meantime because that's what that's about it for the euro dollar. So pound USD didn't break to the upside like the euro dollar and still moving sideways, but I was thinking reversal territory on the pound, and I think these odds are shifting a bit towards a breakout at this moment. Now, one of the reasons why I thought this was bending was the divergence between these tops. It's at least a single divergence, perhaps a double, depending how you count. The potential head and shoulders, right? But let's see. We got 1, 2, 3, 4, 5, 6 candles. Let me check here. 1 second. The high is 129.88. Okay, so that's 1, 2, 3, 4, 5, 6. Today will probably be a very important day, I would say. Yesterday was still bullish. Yesterday was still a bullish day, although it was the last few days have been indecision. Price is still above the weekly pivot point. It is a consolidation like this, but I'm not looking to trade the downside yet. It is still being bought up pretty fast as well. Look at that. And being sold here. And I think that well, at this moment, I would probably not consider, sorry about that, not consider downside unless it breaks. I'm hitting all kind of buttons by accident as I'm holding my control button. I would probably wait for the break of this trend line for any downside, or at least wait for break below the pivot point. At this moment, today, if today does break like this, I would consider, if the 4-hour candle closes near the high, breaks above the R1 and Keltner, I would look for, on the lower time frame, look for breakout continuations on the pound. The pound might follow the euro dollar, but later. If today does not break to the upside, then there are 7 days not breaking the top of the daily chart. Then a reversal seems a bit more likely again. So on our intraday 4-hour chart, I would, like the euro dollar yesterday, I was looking for intraday downside, but daily chart confirmation upside. We got the latter. Today on the pound dollar, I'll be looking for upside on the 4-hour chart confirmation and probably daily chart confirmation for downside. That's my view. Let's see if that plays out. I'm not really jumping for joy for downside on this 4-hour chart, but maybe if there's a good 4-hour candle, I might consider it. But I think probably waiting for some correction and then continuation tomorrow makes more sense. All right, dollar yen. Basically, yesterday we were looking at this breakout candle. We got the breakout candle on the hourly chart. I was mentioning 2 stop losses here, the looser and the tighter one. But I did say with the tighter one, there's a risk that it might correct up to this trend line and then move down. That unfortunately happened. So anyone using the tighter one did get stopped out. The one using the looser one was fine. Now there's always a chance to re-enter if you don't think that you're revenge trading. And there was a good bearish candle right here that could have been a good signal, and price did continue down to the target as expected. I talked about the minus 61.8 target being the most likely candidate at 112.50 with the S1, and indeed price nicely reaching that target. So that was a good breakout. Excuse me, good breakout. Hopefully you managed to get some pips out of that. The 1-hour candle was a good breakout candle, but you see how tricky sometimes it could be with the 1-hour. Good breakout candle, but still the retracement. Price likes to retrace before making a good movement. That's just the nature of the market. It likes to retrace, likes to cover its tracks. Got to keep that in mind with stop losses. Got to keep that in mind with targets and patience. And yeah, that's just something that happens quite often. 4-hour chart, ironically, the 1-hour candle was good, but I was hesitating about using the 1-hour or 4-hour candle, remember? So look at this 4-hour candle. Look at that wick. Obviously, if you wait for the 4-hour candle, that is not a breakout candle. Excuse me. That is not a breakout candle. That is a bullish candle with a big wick. So would not be something of a signal at all, of course, not at all. Not for downside. Maybe for the upside, right? But I wouldn't take it to the upside because of the fact that we have a resistance line so close. And I was expecting also an ABC. The next candle, however, is a lot better. That could have been a signal, or the next one even, all fine, relatively fine. I mean, this one is probably the better one. This one has some wick here. But did break below the pivot point, so. Alrighty. Now, with regard to the next step, as I said yesterday, I think there is a chance that price might be retracing this entire swing. So I think that more downside is possible to 112, 112 down to 111, 22, the 50 fib, the 38.2 fib. Those are candidates. I think 50 is a bit more sturdy level because of the confluence with S2. Right there. So at this moment, price might make that next step and fall, but it's not something I'm really interested in trading for those probably a few pips, considering where the risk has to be. Either you're in that trade and you're holding on and you're trying to catch a few more pips, or you wait for a correction. There's I don't think there's any reason to trade here to the upside or downside. Right? You could take some profit here and try to take the rest of the profit here or at 111.20. But for new entries, like we were discussing here, I would need to see some small correction, like the euro dollar, basically, some bear flag, for instance. All right, and then if we do get that, I think price is set up for continuation down to 112 and perhaps 111.20. All right, Ozzy talked about the potential for price to head up higher within this channel, although I didn't like the Aussie, as I said yesterday. And it was going sideways, basically, nothing major so far. Price actually made a little bit of a dip, then bounced, then a dip, so it's been going like a heartbeat sideways. For those looking for some kind of candlestick pattern at critical support, this one was a pretty neat example of that. That's today's topic, candlestick patterns at critical support. This is a pretty good bullish candle at the trend channel. It was a potential break. You see the wick below that channel, but a false break and a bullish close. So small little underthrow below the channel got smashed with the bullish candle. So that's a pretty good candle example, and that could have been used for a long entry within this channel. Anyone looking for a retracement of that candle could have gotten it, but a few candles later, as you see, as price broke, hooked back, retraced that candle, and then continued. The Kiwi also continued. That was good for Craig. Let's see, Craig is not with us today, but Craig is in the long and probably still in the long. Not sure. Of course, he's not here, but anyhow, he was long from somewhere here. That's doing well at this moment. Let me redraw this. All right, this Fibonacci sequence tool levels. 1 second. All right. On a 50-minute chart, if it makes some kind of correction like this and then turns, I think that could be an interesting long potential on the 50-minute chart up to 69.50. Let's see if we get that pullback though. We never know, but that would be nice if it happens. Alrighty. So otherwise, let's see. We were talking yesterday about your yen. Yes, the continuation up to that 7th level, indeed. 3, 4, 5, 6, yes, 7th. All right, let's take a look at the hourly again. All right, there we go. And we were looking here in the small consolidation phase. And a good breakout candle and had some 70 pips continuation here, but didn't quite reach the 126.60 yet. Went up to 125, 80-ish, right? Just above 80. So I'm not sure if it will get there, but now it's making a bit of a retracement. Let's see if we get a bounce. Let me add the fib tool again from a different bottom here. All right, here we go. Here we see that the 3rd level is broken. That's why I was interested in a continuation. It went up to the 4th level. Let's see if we can get up to the 5th and the 7th level on the higher time frame. That is 126.60 and 127. For that to happen, I would probably need to see price bounce here, which could happen. We got support zone right in here. It's a supply and demand zone. So there could be a bounce. Bounce probably would be best to keep an eye on a 4-hour chart. This is the 5th candle already. So let's see if there's a bullish candle on the 4-hour chart that could indicate the bounce and continuation up to that target. But definitely euro yen finding some struggle here with the upside that has to do with the dollar yen side, not with the euro side. The yen side, sorry, not with the euro side. All right, pound yen was different. We talked about that yesterday too, that the euro yen was bullishly set up, and pound yen didn't have that same upside energy, and it actually moved down. The pound odd and pound is going to follow suit slightly, pound yen a bit more because of the fact that the yen, of course, was falling as well. The euro pound moving up as well, by the way, strongly. Euro strength, pound weaker. All right, so I was talking about, I think, the pound odd potential to fall down to, yes, to fall down to, let's see, S2, right? S1, S2, I think, yeah. It hasn't done that yet. Actually, it's kind of sideways. That has also to do with the fact that the Aussie, of course, not the same as the yen, but I think that it could still be pretty good for a continuation. It's making kind of almost like an expanding wedge like that, as you can see. Still bearish momentum before that, so I think it still could get there. Let me check the 4-hour chart. This bearish candle on the 4-hour chart could confirm the doji that we had just before it. And that might signal a bearish continuation. So that could be fueled. For pound out to move lower, we need basically the pound to be weak, which I'm not sure, depends on the pound dollar, for instance, or the Aussie to be strong. So this Aussie dollar would have to start climbing, which it is doing. So I think there could be reason, one of the two could happen, and this could fuel the pound odd downside. Alrighty, folks. Just taking a quick look at some other currencies. Euros, Czech crown still falling. Czech crown still gaining despite the euro strength yesterday. That's quite impressive. Alrighty. Let's see how far this falls. Probably next stop, minus 61.8 target at 26. All right. Well, that was a quick review of the market. Let's take a look at some examples of candlestick patterns at critical support or resistance and see if we can maybe find some right now. So what is critical support or resistance? That's really your choice. There are a lot of options. I like to use tops and bottoms, like to use fractals. I use Keltner, Admiral Keltner, which is part of the MetaTrader 4 Supreme Edition, which you can find right here. And you can go to platforms, click on MT4 Supreme Edition, which will lead you to this. And you can download it for free. You can use it for free for 1 month. But then after 1 month, you will need a live account to keep continuing with that. It has a lot of things, including, hang on. Sorry for that. I was stuck for a second. Oh, it says free for demo accounts. Well, yeah, I thought it was only after a month, but I'm not sure now. But okay. So yeah, mini terminal, trade terminal, tick charts, easy way to stay connected with real-time news. The indicator package, part of that has the Admiral Keltner, which is not even mentioned here, but it is part of it. Plus all these things. And my browser's getting stuck again. I'm not sure. Doesn't happen normally, but okay. Anyhow, you get the point. A lot of good things there. One of those is the Admiral Keltner and Admiral pivots. So those are levels I like to use for support and resistance. But one thing you want to do is address which ones you use and stick to them, right? So I use fibs on higher time frame, Keltner, trend lines, and weekly pivot points most of the time. Okay, so those are my favorites. Also sometimes Murrey Math, which I don't show too often. There are a lot of lines, makes things too confusing. So one of the reasons why I use this template, the standard template I show you, is actually this. One of the reasons is one moving average, one Keltner, one pivot point, one oscillator, and the mini terminal. Is that anything more, I feel that this could already be quite a lot of information. Anything more might just confuse people who join for the first time, even if you don't join for the first time, because there's a lot of info there and it's difficult to take it all in. It's easier for the person that knows the template, makes a chart, to add more things, because you know the role, you know why I have it there, so you can comprehend that easier. If you're looking at someone else's chart, it's never that good because it's confusing. So maybe this is really too much. I don't know, but this is what I thought is still kind of a fair balance, like a Keltner and pivots for support and resistance, the moving average for trend, and the oscillator for divergence. So those four things. So that's their role as well. So the key things you see here for resistance and support are the Keltner and pivot. But I also use fibs. I do draw fibs on, as you notice. I look at tops and bottoms too, and trend lines. But those are things I add as we look along. So yesterday's bullish candle is a strong breakout candle, in fact. Here on Monday, last week, there was a good, I think it was Monday. Yeah, indeed. We had a strong bearish candle. Engulfing twins at the Keltner was a signal that, all right, this is going to retrace further, and it did. Not as much maybe as we thought, but still almost 100 pips, right? So this is basically a prime example, actually, of a candlestick pattern at critical support and resistance. Now, how we use that is a second phase, and it could be used as an entry right there, or it could be used as a trigger, and then we look at lower time frames to hunt for a setup to the downside. It could be like a heads up, right? Or it could be the actual entry. Depends what time frames you like to trade. Almost 2 weeks ago, showed a candlestick pattern indicator. Well, let me find that. Did anyone join that webinar 2 weeks ago? I talked about two strategies, one with a candlestick indicator with Admiral Keltner, one was with the HMA and the oscillators and the Fibonacci sequence levels. Sorry, I'm just, in the meantime, thinking what the name of the indicator was. That was this one, yeah. No. I forgot the candlestick name, fortunately. Too many indicators. I really have a blank. That's funny. I just have candle stars, of course. Sorry. There we go. So one thing helping with the candlesticks is this indicator. If you don't feel strong, confident about reading candlesticks, not confident about reading candlestick patterns, right? An indicator like this helps, like training wheels in a way. And might seem complicated because all the signals are like that, but red dot basically candlestick pattern is bearish, blue dot is bullish. And then there's a letter combination which goes to the left and explains which pattern it is. So it is a kind of a good way to learn. And eventually I think that you will know these patterns better and better, and you might even decide to not use it. But it's a great way, effective way of learning a lot quicker like this and not missing anything. So definitely a benefit. With regard to support and resistance, using support and resistance levels that are automatically plotted, like a Keltner, like pivot points, like Murrey Math, is a great benefit too. Sure, I love fibs, but you have to do it yourself. And there's certainly some disadvantages of that. You have to learn it. You need some good experience with that. It takes time. If anything is automated like that, like the Keltner, it moves automatically. Like the Murrey Math, it moves automatically. Anything that's plotted automatically is a benefit, just like this candlestick pattern. So if you have something like this, it's could help, right? Now, 2 weeks ago, I'm not sure if anyone joined, but I talked about specifically the Keltner, all right, and the candlestick patterns having to basically bounce at this Keltner after a strong momentum. All right, so for instance, let's take a look at the daily chart. We don't have an example. Oh, here we do. Right? So I was looking for price to be below or above, right, but breaking and staying significantly, a couple of candles, 34, below Keltner, which we see has happened here. The closes were below the Keltner. Then I wanted to see price, I wanted to see a candlestick pattern and a candle above or back into the Keltner. All right. So these candlestick patterns do not qualify. All right, because the candles are in the Keltner. Now this one actually has a candlestick in the Keltner. Let me zoom in a bit better so you can see that right here. But it's a doji, and TO, it says, I'm not even sure what candlestick pattern that is. 1 second. TO 3 outside up down. Well, personally, I would use discretionary thinking here and say, okay, it's a doji right at the bottom, no clear candle. I think that's just indecision rather than a bullish candle. So I would skip that one personally. The only one that I think is valid in this reversal is this one. All right? Because of the fact that that candle is fully in the Keltner, we had a break below the Keltner, step 1. We have a candlestick pattern, step 2. Waiting for a candlestick pattern with the candle in the Keltner, that's step 3. So stop loss below the bottom is going to probably make it. Let's see, low 105.17. So stop loss at 104.95 would make sense below the 105 level. We're looking at a daily chart, so be aware of that. It would be about 117. Stop loss would have survived because it went to 105.05. And the high was 106.70, going for about 260 pips. The target itself could be the opposite of Keltner. It depends. You could use the middle Keltner, or you can just use discretionary target. You could say, okay, I put a fib from here to here. Look for the 38 or the 50 fib. Put a fib from here to here even. And aim for the minus 100 or minus 61.8 target, right? So that would have been an example of a reversal. So that's how you can trade reversals. But honestly, you can also trade breakouts with the Keltner and candlestick patterns too. One of them is yesterday. Good breakout candle, but I'm zooming in for basically a small retracement. I'm not sure if that will happen, so I might miss the trade. Anyone who thought that yesterday, I was saying I'm looking for a confirmation candle yesterday, right? Confirmation, candle close, near the high. That was my trigger. I use it as a trigger, but it's also possible to use it as the entry. I don't think I talked about that yesterday, but I'm not 100% sure anymore. But probably not, because I personally rather wait for a retracement on a lower time frame. That's just my preference. But I might miss it, right? It's possible. Whereas if you take the breakout candle, the entry would have been 110. The close would have been 110. As soon as it closes, you enter. So 110, 80-ish, 85-ish, right? Around that level. And the stop loss could go below yesterday's low. And you're in that trade and up a few pips. And you keep monitoring these daily candles. That would be a breakout. It's not a candlestick pattern because there are no patterns visible with this indicator. But with the breakout, that is okay. Another breakout example would have been this one right here. This candle right here. Right? Another breakout example, stop loss above it, entry here, and ride those candles. The exit, well, maybe on one of these bullish candlesticks. Definitely the one that shows the reversal, obviously. All right. So this is the daily chart, but I think that 4-hour chart is good. Hourly chart, I think confluence is important. 4-hour chart, it would help too. Don't get me wrong, but it's a sturdier chart in a way for such a combination of candlestick patterns with support or resistance. Hourly chart, okay-ish, but confluence is much better. And I think I would say, I would even probably say critical on an hourly chart. 50-minute chart, obviously there's no doubt about it, right? We need confluence. We need to see the bigger picture. All right, so let's take a look at that 4-hour chart. If you have any currency pair that you would like to look at, let me know. All right, because we're just walking through some of these examples. So you see some candlestick patterns here as well. By the way, as the euro dollar was hitting the 78.6 fib yesterday, no, 2 days ago. Now, one of the reasons why I didn't take the short then was the candlestick patterns are above the Keltner. You see that? So it wasn't time for the reversal. What I was looking for yesterday was actually a candlestick pattern in the Keltner. That would have given me the okay to take the reversal to the downside. It didn't happen. In fact, we got the continuation breakout, and I just didn't like the fact that it was right at 110. But 4-hour candle right here, that could have been a breakout even yesterday still, right? I just didn't like it right there. But this breakout, for instance, on Monday, early Monday, as it broke above the pivot point at Keltner, could have been a good breakout too. Right? So some breakout examples and reversals that did not occur. Other reversals here, yes, that one failed actually, right? Keltner, no, excuse me, it didn't break below the Keltner. Sorry, stupid. So no, you could use them perhaps if you see confluence, but what I specifically was looking for reversals was a break below the Keltner or above it. So that didn't happen, sorry. But who knows, maybe, so I'm now talking about the Keltner, right? You can, of course, use other things. Let's look at Keltner for just a few more examples, though, and we'll then dive into some other tools we can use. All right, here, this one, I think is okayish. The body is in the Keltner, the wicket's above it, and we see two in a row. So if you take a reversal there, I think it's always easy to say in retrospect, but I think it makes sense. All right, this one, of course, doesn't. And we did have price above the Keltner here. So I think it qualifies. This one is a bit iffy-ish because the candle close is in the Keltner, but part of the body is above it. This one is a good one. Oh, sorry. Right here, a couple of candles above it, above the Keltner, and then we have a candlestick pattern in the Keltner. And that's a great one. Look at that downside. So those are just a couple of examples of reversals at Keltner. This is a good breakout candle and indeed continuation. Again, a breakout candle, retracement, continuation. Breakout candle, continuation. Same thing here. Small continuation, but still enough not to lose at least. Here too. Took some time, but still. Failure to break. Failure to break. So those are a couple of examples with that. Let me take off the Keltner now, and let me remove the pivot point. And let's take a look at something else. Let's take a look at Murrey Math. The cool thing about Murrey Math, this is one of Nanet's favorite support and resistance levels, is that it's automatically plotted, automatically changed. Not sure if you know about it. Who knows about Murrey Math? Or who doesn't know? Maybe I should say. Who doesn't know about Murrey Math? All right, everyone is aware of Murrey Math. All right, great. So with the Murrey Math, we could use the same principles. We can look for patterns at key levels, for bounces and maybe even breakouts. But let's take a look at bounces first, right? Bounces, for instance, here, as price is approaching support, 1808, reaches up to the fifth eight, going back down, as you can see, we can look for candlestick patterns that show a bounce at these key levels, right? So any of this one, this one, this one, this one could be something to think about. Now the stop loss, you want to always go one level, at least one level or two to the opposite side. So if you have this one, you see that the 0.8 is protected. You still want to go below minus 1/8, right? Here too. Here, with a bullish candle like this, you might go below 0.8 because already, in this case, you have a kind of a more confirmation of a turn to the upside. All right, so these are all great examples of price respecting lower Murrey Maths going to the upside. Now, with these examples here, you're not looking to short because these are levels in the middle, closer to the bottom end of the numbers. So if now any chance price would show some candlestick patterns, right, it might be worth thinking about just to catch the small retracement. Although I think personally that price is still going to go up higher because of wave analysis. But all right, but you get the point. Price is at a high level of Murrey Math. So then that's of course where we get the most sense out of using those levels. We get the most, it makes most sense to look for reversals when it reaches higher levels of resistance or higher levels of support. Preferably not down all the way to -1, -2, or +1, +2, by the way, because then the chance of a breakout, as you probably know, is higher. So you preferably have reversals that occur preferably between 6.8 and 8.8 to the downside, or 0.8 and 2.8. This is the middle zone. When you get above or below, the breakout could occur. So price is breaking above 8.8, so the breakout, might be more likely in this case to the upside, because it is trying to break above the 8.8s. Now these levels are different on all time frames. And you see that the daily chart, it looks a lot different. Right? Daily chart, I'll be looking at this level, the 8.8, very important level for the year dollar at 112.25, 112.50. On the daily chart, we saw here significant support and bounce at the 1/8. And then I get the 2/8, even the 3/8. The resistance was not deep enough here, at least. It was here. And maybe even here, as it hit the 6/8 already, as we talked about before, but it just didn't move too far. Now it's approaching the 8/8, probably. All right, so that's another example of support and resistance, candlestick patterns at the Murrey Math resistance levels. Let's take that off now. And another thing could be fractals. These are the standard fractals from Bill Williams. But I have my own fractals too. I'll show that next week. And we'll dive into why my fractals are different and how they could be beneficial. These fractals are the standard ones. So just insert indicators, Bill Williams, and add the fractals. And they indicate basically temporary pauses. So for instance, here, right, this second candle confirms this fractal. So they indicate bounces and potential breakouts. But, on the higher time frame, I think that they are probably a bit late, let's say, in some cases. Let me say it this way. You do not want to use the fractals the only thing when making decisions, in my opinion. It's a useful tool. It's useful to automatically and quickly see the resistance. And they don't have to be that big, by the way. You can make them smaller, like this. So it's a useful tool to say, okay, well, there's support and resistance. Let me be aware of that. But it's not something that I would automatically, I would like to see confluence besides the fractal, personally. And I'll explain why my fractal is better, because there's more information connected to it. All right? So I think that the context with the fractal is important. So we need to understand that context before being able to trade it. But with that said, you can take a look at examples. Let's see. Maybe somewhere in here we can stick to. So let's see if I can find an example. So far not. All right, here, this is an example. So you get the fractal after two candles. So this is the first, this is the second. The close of the second candle has also a candlestick pattern. So not only do we have a fractal, but we have a candlestick pattern that confirms it. So that would be an example of the bounce using that fractal. Okay? Let's see. These are not examples, and the reason why is because the fractal is not confirmed yet. Here, this is an example. Fractal, second candle, candlestick pattern. This too, actually. So this one is an example, and this one is an example, right? We have a fractal, second candle, confirmed. So not this, because this is the first candle. So the fractal is not actually visible yet. Why? Because as price moves up and it has one candle not breaking it, this fractal is there, but it's not confirmed. It could disappear if price would have done this on the second candle. This would have been an example of using this fractal. It did move up a bit. This too, candlestick pattern at the fractal. Although this one has, of course, resistance close by, but I think it's still okay. This one too, fractal and the candlestick pattern. Now, as I said, I think that the context is important. So would this be a good one? With a correction like this? Maybe. But point is that you do have a long-term moving average, so you want to keep in mind the trend and patterns. I think that this one is a lot better than this one. Right? But it did move up a bit higher. Why? Because we had a higher high already and a higher low. So we were in this motion already with the trend. Here, not so much. Here we had a lower low and a lower high. So that's what I mean. Part of the reason, part of the things that you can take into consideration, trend, patterns. All right, folks. Well, those are a few examples of candlestick patterns at Admiral Keltner, at Murrey Math, at Fractals. We will look at it next week again. This is going to be the topic for the next 2 weeks after this. A series of 3 basically. This is the first one. So we can take a look at anything you like too. If you have a preference, let me know for a particular tool. One thing I do want to show you next week is my custom-made fractal and why it shows more info than the standard fractal and how to use that fractal for bounces and get candlestick pattern confirmations as price shows my fractals and reverses. I think it's going to be interesting. That's up for next week. If you're interested in finding out more info about Admiral Markets, you can go to admiralmarkets.com. You can then check out, for instance, the Supreme Edition. You can check out our articles here. This one's talking about the bullish economy and inflation and how it's facing bullish technology. I think you might find that interesting. Or, of course, our analysis, technical way, fundamental, more webinars. You can find it, education. You know the drill. I guess if you've been here a couple of times, how to find that info. So, wish you good trading, folks, today, and talk to you tomorrow, hopefully. All right, we'll have a webinar on actually bands. So we'll talk about that a bit more in detail, improving your trading with support of resistance bands. All right, so see you soon. Cheers.